In the first couple weeks of trading, Alibaba is up nearly 15%. Now, Alibaba last year was down over 50% at one point. Now, we're starting to see a little bit of an increase on Alibaba's share price, maybe because Charlie Munger doubled down, possibly because folks are getting buying back in after tax loss harvesting. But one indicator that recently happened was Alibaba's stock price just broke the 50-day moving average. Now in this video, I want to look at that a little bit more closely and see if it provides any insight as could it be an uptrend or could there be even further downside. All right, jumping right into it on the 3-month chart, Alibaba's stock price, as I mentioned earlier, just broke the 50-day moving average. It was around $134 a share right now, and they closed the day at $137 a share. Now the 200-day moving average is still at 101, and that's where we're really looking forward. The stock price breaking that's really going to mean we're in an uptrend once that is broken. But even on the 3-month chart, you can see that Alibaba's stock price has hit and broke that 50-day moving average. When it did, the stock price did stabilize for a period of time, about a month, and then dropped back down to new lows around $110 a share. Now, if we go ahead and bring this back a few times, almost a little over a year ago, a year and some change, Alibaba was at its all-time high around $317 a share. Now, since then, you can tell that the 50-day moving average has broke a little, 3 months after that. It stabilized for a period of time around 260, 270, and then it fell again. It broke periodically just for a day, broke again, dropped down, broke again, dropped down, broke again, dropped down. Now, over the last year, the 50-day moving average has been broken about 6 times. In only 2 of those times have you seen the stock price start to stabilize or have any sort of uptrend. Ever since the all-time high, it really just sends that it bounces right back off of the break almost immediately, and we can see that continuing to happen. The question is, what is going to happen now that we've broken the 50-day moving average? Now, 2 things I do want to point out, and this has nothing to do with the 50-day moving average, is that back here in January is when Charlie Munger actually first bought his position in Alibaba, and we saw that stabilization back there. And back here at this point, it was another disclosure that Charlie Munger bought additional shares in Alibaba. He didn't double up, but he definitely bought more shares. And we saw this huge bump from around 140 down up to 170. And it stabilized in the low 160s for a decent period of time, considering Alibaba, again, was in a very strong downtrend at that point. Now, almost a month later or 2 months later, we're getting news again that Charlie Munger increased his position in Alibaba once again, and the stock price is up almost, let's see, $40 since its lows, about $30 since its lows. And we saw that Alibaba jumped about $40, $30 or $40 since its lows on the last time Alibaba was reportedly bought by Charlie Munger. So could this possibly be another bounce because Charlie Munger bought Alibaba? I'd like to think not. However, there has definitely been 2 big incidents where we're seeing a strong buy around the news, and we see 2 very, very, very similar things here. And now the rise in the stock price isn't nearly as fast from the last 2 times it was announced that Charlie Munger bought Alibaba. Now, if you look at when it was announced, you see it's almost been a week, but in the time frame that the other ones took off, I guess it's pretty close. It's pretty close. Definitely not as pronounced, but it is pretty close in terms of the total price movement on a dollar value. It rose about $40 the first time, about $40 the second time. We're at about $30 roughly, give or take, from the all-time low. So Alibaba could go up a little bit higher when we compare it to what has happened when Charlie Munger bought in the past. But I really don't think that's a really good indicator. This is nothing but speculation in my opinion. Again, the fundamentals for Alibaba are consistently the same. They have good financials. They have good, strong cash flow. There's a lot of good positive things going for Alibaba. The risks are well reported. They have many challenges with the CCP. There are definitely some economic issues in China that they have to deal with. And there's bad sentiment around Chinese investments across the board. And we are seeing some positive directions on the DD listing. We saw that they're going to do a 1-for-1 on the ADS shares to the Hong Kong exchange, or at least make that available for US investors. So that is a positive thing. So even if Alibaba was delisted from the US market, they wouldn't dilute or completely wipe those shares out. They would give US investors to exchange those on a 1-for-1 basis, which kind of alleviates the, Alibaba is going to zero if they decide to delist from the US exchange fears. So I'm going back to the chart. This 50-day breaking, the stock price breaking the 50-day moving average may not mean a lot. However, it is good. It is a start on getting closer to going back closer to the 200-day moving average. As you can tell, there still is a large gap there. I think, again, as I've mentioned before in the past, the biggest thing that Alibaba has to be able to do is in Q1, they have to show strong earnings. Remember, we had a weak earnings report where cash flow is down because of some investments that they made. However, the way they decided to capitalize those, it was unusual in how they did their reporting in previous quarters. So in my opinion, Alibaba is going to need to see their free cash flow get back to where they were prior to the quarter that they reported, as well as be able to beat earnings. In the last 2 quarters, they were disappointing on the revenue side. So we'd like to see them beat revenue. So they need to show strong financials. That's one thing that you could count on them for. But they were very weak the last couple times, or the last time that we saw their earnings report, and we saw that huge sell-off was around November 18th. And the other thing that we're going to need to see, and this is more of something that's out of Alibaba's control, is we're going to need to see some sentiment change around China from an investment perspective, as well as the Chinese government lay off these Chinese tech companies for a little bit to let things kind of calm down, and we should see Alibaba take off. However, some of those things, again, it's been a roller coaster on the downside for Alibaba in the last year and a half. And so if you are an Alibaba investor or thinking about investing in Alibaba, please tread with caution. Know that this is a risk on investment, as most are, but this is a riskier investment in my portfolio. So please treat it as such. To my returning subscribers, just so you know, I've been out of the country for a few weeks, so that's why I didn't have as many videos coming out. So I'm back, and I'll be coming out with normal content as I typically was before. For those who are new, thank you so much for watching. Please consider subscribing to videos on personal finance, investing, and stock analysis. Thank you so much for watching. My name is Frank Finance, out.